It's day number 37 of the $1,000 account challenge, and we are down yet again, another red day, down 5.49% of the total portfolio balance, or lost $141. Am I mad about the losing day? No, not really. I had a plan, it just didn't work. So it is what it is, but I am getting sick of these red days. I will admit that. If you don't know, my name is Gates. I'm taking $1,000 and I'm day trading options to see how far we can grow this account. Today I traded live with the team, and off the day trade watch list, we had Apple as a short idea below $185. So the setup here this morning was a gap down. Apple on the daily chart time frame has been shaping up this pennant pattern. I'll draw it for you so you can see it. Shaping up this pennant pattern, and yesterday kind of gave us the breakdown from that pennant. So when I put it on the watch list last night and then reviewed it this morning, I was thinking already last night that we were going to get a continuation down. We get the gap down this morning. I'm like, fantastic, that's further confirmation. And so I decided to go short on the stock shortly after the open because we get a drop there, which is even further confirmation. And of course, it just rallied right back up. So that's kind of the gist of the trade. You know, we had a pennant breakdown on the daily, which looked good. We had a gap down this morning, which looked good. We had an opening sell-off, which looked good. All signs pointing to this thing is looking weak. It's going to continue to break down. We just didn't get the continuation. So $185 is right here. I have a trend line drawn there. We do get the initial drop down. I do not go short on this initial rally, which may have been a mistake, because had I taken that entry short there, I might have taken my profits here as we neared the low of day or created a new low of day. But I did not take the initial entry. I was staying a bit patient. I thought that this was too much extension and that we are going to get the rally back up towards 185, which we do. So I decided that I was going to take the entry short here, but I tell everybody that I'm going to take the entry short and leave room to add, because this is kind of a stronger reversal up. And what I didn't want this to be was a double bottom that continued up and then me be in with full size here and wind up closing it out there and getting faked out. So I went short here in case this did reject and come down, right? Just to get some skin in the game. But I also went short there with a small enough size that in the event that it did continue to rally, I could add into the position. So the entry is taken here initially. We are down on the trade, then we're up on the trade, and then we're back down on the trade, and it continues up. And this is all part of the plan. Now, what I was looking at was these all of this consolidation here in the pre-market, and our resistance in the pre-market from that consolidation was in this area, right? So that's going to be 185.4. So that was my spot to add. And in real time, I'm telling everybody this before it even gets to that price point, that where I want to add to this position is going to be 185.4. 184, I think I said 0.5 or 0.4. So we get the rally up to 0.4. I take my additional entry there to lower my cost basis from our first entry. So our average is somewhere around, the middle, somewhere like that. And then we get the move down. Because of theta, because of premium burn on our contracts, at this time, we are up on the position, but we're up only about 7% on the trade. So not really enough for me to take profits on. It does rally back up, and I'm telling everybody as well, like, we're in this trade, but it's your trade to manage. If you like the profits at 7%, you can take it. If you don't trust the trade, we're at break even, you can close it out. It'll be a wash trade. No harm, no foul. You're just paying commissions there for your contracts. But I tell everybody that I'm holding, and here's why. What I saw on this is a pattern known as a head and shoulders pattern. So we have our initial drop down, right? That's not really part of the pattern, but we do get the rally up and then the dip. That's going to be your left shoulder. Then we get the rally up and then the dip. That's going to be the head of the pattern. Then we get the rally up and the dip starting, and this is what the trade is supposed to look like from here, and then we would have been profited in banking. But instead of that, we get this move up, which is very frustrating. Because in hindsight, in reality, I should have probably closed the trade out there. But I was giving it room to work because I thought maybe it'll rally up to this point and break down. And plus, on the 5-minute time frame, what I saw here was a proper bear flag formation. So that's going to look like this, right? Proper bear flag formation, with this being your flagpole. So the rally up retest over here, when I'm not cutting the trade, that rally up retest is only testing the bottom side of this dynamic line of support as a dynamic line of resistance. So I held through. The mistake on this trade maybe was just having too much confidence in it and giving it too much room to work. You know, in hindsight, I could have just closed it out here. Maybe I could have closed it out over here, but I did decide to let it go a bit further, and I paid for it, obviously. So realized about a 30% loss on this trade, which puts me down on the day, if we go back to the profits channel, puts me down on the day $141. Is it the worst trade ever? No, I don't think so. I think we had a good entry point. I think we had a great add point. We just didn't get the move that we wanted. So much like my video from yesterday, you know, I'm not taking it personally. I'm not necessarily mad or upset about this trade. Could it have been cut a little sooner? Sure. But I had a plan, and I followed my plan, and the plan just didn't work this time, and that's okay. So I'm all right with the amount of risk that was assumed. You know, we're still up over 150%, or about 150% in the account challenge, starting with the $1,000 base and still at 2,400. So, you know, we're still okay there. And the risk is managed. You know, I think I can make $140 back in a couple of good trades. It's just a matter of when are we going to actually get those trades that give us that follow through. So keep in mind that the market's not out to get you. It's okay to take losing trades. It's okay to have a plan that doesn't work. It's when you're holding this too long. You know, if this rallied all the way up to 187 and then doesn't work from there, and you're holding it the whole time short and adding in, you know, then you're starting to make a lot of mistakes. But as long as you're following your plan and you're okay with the amount of risk that you're assuming and your plan just doesn't work, that's okay. I would still count that as a win because you're staying disciplined within the parameters of the trade that you've already laid out for yourself. Okay, thank you for watching. That's all that I have on this video. Press that like button for me if you haven't done so already, and consider subscribing to the YouTube channel if you haven't done so already. It's just the best way to support this type of work that I do. I hate to keep booking these losing trades, but I'm going to be as honest and as transparent as I can be throughout the duration of this challenge, and that means posting all trades, whether they're winners or losers. So again, thank you for your time, and I will see you tomorrow when we continue the $1,000 account challenge.